Hi everyone, it's David and welcome back to Safer FX. I thought I'd do a quick update this morning just to illustrate the difference between a market and a mechanism. So in the link below, I've got a video that I posted yesterday, pound New Zealand. And I called it sort of last night in terms of, hey, look, this is beginning to trend, and albeit the fact that it's still trending on 30-minute, and even if I jump out to the hour, I think pretty safe to say that it actually is moving higher and it will continue to trend on the hourly. The candle I want to draw everyone's attention to, though, is this big, dirty, big white candle here, which for all intended purposes looks great because market makers have cleaned out all the liquidity, below this sort of price here, and so they can drag the market higher. However, last night, while I took my profits out of this, I was holding a position on the anticipation that this was indeed going to move higher, and it was going to move higher in a reasonably, I don't know, what would you call it, routine manner, but of course it didn't. So this is what can happen, particularly on some of the cross rates that are a little bit more obscure, and probably, pound New Zealand is probably one of the more obscure ones. Just to illustrate a point, so took a small loss on this one because I hadn't moved my stop up to cover the entry and the position, which I think from memory is around this level. It's all in the previous video. But just to give you a bit of an idea, so this is just clear manipulation by the bigger players, just picking up liquidity whenever they can. They'll just drop it down. So obviously the opening trade's down here, and they'll just drive it high. So they're picking up all the liquidity on this one to the long side for long side move. That's why I've still got a shade of green, because I still think this is a long, but this trade's now done for me because the entry risk now is just far too high. The only rational spot I could see to put an entry would be below this price here, which is what was it? It was about 230, I think it was. But that's just far too far from where price is currently, and we don't really know, how much more this has got to run. So just a really interesting one, just to follow up, close this one out. Particularly the cross rates, you've got to be super careful because we all might think these are markets, but they're not markets. They're merely a mechanism for taking money out of smaller hands and putting it into larger hands. So as soon as we realise that and we play their game rather than probably the game we would like to play, we're all a lot safer and better off. So look, trade safe, and until the next one, I'll see you then.